Let's stay local and bring in Gemma Dale from nabtrade, who joins us here in the studio. Gemma, welcome back to ausbiz. Great to go and see you. What's been going on? Been pretty volatile, so how have the nabtrade customers been handling it?
Everyone's really settled down. It's amazing that continuous volatility tends to kind of sap the energy of a lot of our guys. So we saw them kind of excited early on, and now they're like, I don't know about this anymore.
Too hard.
Ton of cash, absolute ton of cash. We're still seeing new accounts opened. It's not like people think that there's no opportunity out there, but they're not going to chase everything anymore. They had that awesome run 2 years ago where they made $1 squillion out of everything, right? Buying the dip worked perfectly. Doesn't seem to be working as well anymore. So unless it's in their real target stocks and the things that they passionately love, there's a real sort of sense of hesitation currently with people going, I want to see how this plays out. I'll give it some time.
Okay, so if we're thinking about where we are seeing some action though, the US retailers, consumer staples stocks got hammered, as you know, very well. It was surprising to see some of that reflected here locally because the two aren't really connected, but still, we did see selling in Coles and Woolworths and Wesfarmers as well. Was that an opportunity for investors?
My favourite is Wesfarmers. There was speculation that people know that Wesfarmers owns Target, and Target got hammered overnight.
Not the same Target.
It's very different. Yeah. I mean, the branding's very similar, obviously, but very different companies. So I found that quite fascinating. It's off nearly 8%, right? It got absolutely hammered. Depends on your view, right? There was a bit of a view that it's just been PE expansion over the 2 years for Wesfarmers, and so there was plenty of opportunity to strip a bit of the price back. Anyway, our guys loved it, absolutely loved it, bought tons of Wesfarmers yesterday. We're very excited. And Woolworths was really popular too, so it'll be interesting to see if there's any response to the offer this morning. Coles was popular, but the more certainly the consumer electronics end and all that sort of stuff. So JB Hi-Fi, Harvey Norman, so on, nothing, not a nibble. And they were all off 5+%. There was just no interest, and I find that really interesting. We're quite happy to stick close to home. We like our Bunnings and our Kmart, and we like, certainly like supermarkets. They're quite popular, but we're not going to touch the stuff that people have already bought a ton of in the last couple of years.
I've been hanging out at Bunnings far too much. Get chairs and Ryobi. I've been buying too many of their electronic tools recently. China, there's a bit of optimism out there. Reopenings of the Vogue at the moment, talking about what's going on in Shanghai. Still a few challenges there, but what are we seeing when it comes to those China-linked players?
Look, it's still all about BHP and Fortescue. I wish it weren't, but that's where it is. I only wish it weren't because it's boring and I talk about it every week. Not because there's anything wrong with the companies or the stocks. That's where the interest lies, and it's continuous. A little bit of the heat's come out, so the volumes are not as high, and there are fewer buyers, but it is consistent buying, and it is amazing how continuously our guys will keep making that trade. While they can keep making money out of it, they will. That's what they're going to do.
We were talking about Macquarie last week with interest. Look, it had a couple of down days, just going by memory, this week again as well. Again, is it attractive?
Yeah, Macquarie's so interesting. Talked about it so many times, but there are those three stocks that were only held by a handful of people. So there was Fortescue, there was CSL and Macquarie. And the reason they were only held by a small number of people is because they got really expensive over a very long period of time. And our guys don't like stuff that's expensive. They want to feel there's some upside to it. But as soon as they get beaten up, they will buy them. So CSL, we saw a huge expansion in the number of people who owned it last year. And we have seen a huge expansion in the number of people who own Macquarie. And the people who already hold it are absolutely buying at this price. If they can get it under $180, they'll be all over it. So it's in the numbers all the time now.
What about Westpac? You traded ex-dividend. What's the behaviour been around ex-dividend at the moment?
Yeah, you assume people know that the stock has dropped because it's X, right? It's if you go to place a trade, it's on the platform, like literally written underneath the chart. So it's quite hard to miss that piece of information. But 4% off, everyone bought it. Westpac's been absolutely the preferred bank of the last really 18 months. It's quite amazing how continuously popular it is. It's quite a laggard still, right? ANZ's marginally underperformed it over the last 12 months, but it's very marginal. Westpac is nowhere near running as well as NAB, for example, and yet our guys keep buying it. That's the one that they want to hold. They feel at some point it's got to come back. So massive volumes when it's off 4%, even though it went X.
What's the behavior been like around ETFs, just to expand on the conversation we had last week?
Yeah, this is fascinating, and I'm at an ETF conference in a couple of weeks. I've been looking at the data reasonably closely, and it also comes up continuously in all the conversations we have with clients. For a long time, people like ETFs are the thing, that's where the trades are. I was once asked when I was on a panel, do you feel that retail investors will stop trading and will stop seeing volatility in the market because they're just going to buy ETFs? And I was like, I think you've misread the average retail punter, to be frank. People love placing trades and thinking they're going to outperform the market, but we see consistent buying now. Every time there's a down day, there is massive buying in ETFs. It is really the ASX 200 most frequently, but the NASDAQ's starting to pop in there, and that's interesting. So clearly people are starting to think there's an opportunity in international markets. We haven't seen that in a long, long time.
Yeah, I was reading somewhere earlier in the week that single stock names, maybe the volumes are dropping off a little bit, but the ETFs are actually picking up during this volatile period we're seeing at the moment. You mentioned the NASDAQ. What's going on offshore at the moment? We know that Tesla's a perennial name in the list. What else is on the other buy list or sell list over the last week?
Yeah, so it's always Tesla, and frankly, it's irrelevant of what's happening to the price. It can be up, it can be down, it can be all over the show, which it frequently is, and they're still buying it consistently. Apple's the second one that does the same thing. There's a big gap between the two, Tesla, daylight, everything else, but Apple is consistently in the buys. The one that I loved this week was there was an enormous trade, won't put a number on it, massive trade in Chevron. Huge, so that's what we're buying apparently. That's the big thing.
Well, oil, gas, price, I mean, I wouldn't...
Sort of the opposite of Tesla though, right?
Yeah, absolutely. Interesting.
But they're probably swapped around in the ESG indexes.
Yeah.
All right, Gemma, thank you so much for joining us this week as always.
Great to talk to you guys.
Gemma Dale has her finger on the pulse of what a lot of the retail traders out there are doing.